Thank you for joining me. I'm Alex, and I'd like to talk to you about Snapchat today. Snapchat is a company that's not very old and hasn't been on the stock market very long, and their stock has taken a bit of a downturn. Now, I'm not sure why they've taken a bit of a downturn because it kind of doesn't make sense. They're on the up and up, or rather, they've never been better than they are now. So if you have bought the stock in the past, I don't know why you would ever sell it. Kind of the point. So what they do is Snapchat. That's all they do. That's kind of self-explanatory there. So the price is $15.31 and the PE is negative 18, or rather they're losing 81 cents per share right now. So obviously, if you're looking for a value stock, this is not the one. If you're looking for a dividend stock, this is also not the one. But revenue is about $1.2 billion, which is up 50% year over year, and the growth has slowed down. So the 50% is not what they've been doing. Obviously, they've been growing much faster than that in previous years. Otherwise, they wouldn't be here. The earnings are negative $1.2 billion, which is down from negative $3.5 billion, but before that it was much lower, or depending on how you want to look at it, the number which was much lower. They were losing much less money before the previous year. So obviously some room to grow there with the earnings of negative $1.2 billion. Total assets, $2.7 billion. Total liability is $400 million. And net tangible assets somehow in the positive, which surprised me when I looked that up. So net tangible assets is $1.5 billion, which is down from $2.1-ish billion. So obviously, since they're losing money, the net tangible assets are going down. That's kind of what losing money means. So there's not too much of a surprise there, but their net tangible assets are still positive and will be for, if they keep losing money at the same rate, a year. Now, do I think that they're going to go broke? Probably not. But again, if you're looking for a safe stock, this is definitely not it. So, as I've already mentioned, if you're looking for a value stock or a dividend stock, this is not the one for you. But I think that for a growth investor that sees a lot of long-term potential here, this might be a decent stock. The revenue growth is there. The earnings growth is not quite there, but if they can keep growing the revenue and decreasing their losses year over year, I think they will get to a point of profitability if they want to. And that is kind of the problem that we're dealing with a lot of these tech companies that basically have an app or a website like Facebook, Twitter, all the others. If they increase their revenue by displaying more ads to the users, I think that the user growth slows down. Now, Snapchat is kind of at the very beginning of that, which means that they're not showing a lot of ads, and that's why their revenue is so terrible and their earnings are so terrible, and they could fairly quickly change all that. So if they chose to, they could slow down growth a little bit by drastically increasing revenue and probably getting to a point of where they're profitable. The question is, when do they want to do that, and can you wait that long? And can they live that long? That's kind of the other point. So Facebook obviously has a strong competitor to Snapchat. So somehow Snapchat needs to keep the pace of innovation high while also not wasting too much money in the meantime. So to sum that all up, I think that as a standalone product, Snapchat still does have its place, and I think they can get to a point of profitability and I think they will do that in the near future. Now, the near future here means 2, 3, maybe 4 years out. But if you're looking for a long-term growth stock, I think this one does have potential. The thing is, I'm not sure about what happens in 3 to 4 years and whether or not there might be other competitors trying to kind of get into the same niche, which means that China obviously has their own products because, there's no Facebook, no Google, no anything in China because of the Great Firewall. That does not mean that their products couldn't come over to the Western world and kind of disrupt things here. I'm honestly surprised that they haven't already, to be honest. So, I'm not going to buy the stock, but I think that it definitely has potential. And Hyperchange kind of did a deep dive into their ad revenue and how they could be growing the revenue quite significantly and get to a point of profitability fairly easily. So definitely watch that video and do your research before buying the stock, but I think it does have great potential. That's it for me for today. If you haven't subscribed already and you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.